Kulani, good afternoon to you. So, Sasol releasing results today. Along with energy companies around the world, they're in a pretty good position.
A very, very good position. Their core profit in the past year rose 147%. For the first time, Sasol, since 2019, they paid out a dividend. We know that it is in the past 3 years, they've had huge, massive debts amounting to over $10 billion. That's because of that Lake Charles, debacle that, that project that they had in the U.S., which went on for years and years. They have turned the corner. The war in Ukraine has sent chemicals and fuel prices skyrocketing, and on the back of that, this company has made a lot of money, and it's something that is quite commendable for the shareholders, who are quite happy, and they are actually having a huge expenditure when it comes to their capital expenditure. They're doing very, very well. So this is South Africa's biggest fuel producer, and I think the world's biggest producer of fuel from coal. They've done very, very well, and they are looking at doing even better in the next interim, in the next 6 months of their performance.
There's a huge fight around gas prices. They pretty much they do have a monopoly over natural gas in South Africa. They want to increase the price, what is it, 96%?
It's quite amazing, but I spoke to the CEO and President Fleetwood Grobler earlier today about this issue, and he was quite vehement that their proposal actually comes from NERSA. It was the NERSA methodology that was used to actually propose to the nation and customers that this is, according to them, your methodology as NERSA. We as Sasol believe that this is the increase. They didn't choose the highest possible increase. They chose something in the middle, but you can imagine if liquid petroleum gas prices were to increase by 100%, what would happen to the mom and pop shops and those small businesses and just households who are reliant on gas. The whole of Europe is reliant on gas right now as part of the energy mix and renewable energy. So we spoke about that, but I started asking him about the impact. Yes, they did get the positives from the Ukraine invasion by Russia, but the impact of the war itself. I started asking Fleetwood Grobler how has it impacted on Sasol's operations globally, and this is how that interview went.
So mostly our Eurasian operations in Germany, Italy, has been affected there. So that operation has got to a varying degree energy costs that really increased drastically since this invasion. And that transpired in additional margin squeeze. You would see that in our Eurasian chemicals business and the results we have posted there. We have indicated that we could not pass on all these energy costs that was rising to our customers, and that we still have got a very difficult period ahead of us to navigate what happens if, they introduce further reduction of natural gas into Europe and specifically Germany. But fortunately, we do have also other measures that we are taking to moderate the impact of the gas reduction into those facilities. And we have also introduced now total external electricity into our northern Germany Brunsbüttel site is now coming all from renewables from Scandinavia, not generated by gas coming from Russia. So there are different measures we're taking, but it does impact mostly our Eurasian operations. But the consequence of that is then that natural gas prices, or LNG, has shot through the roof over the last year or 6 months since the invasion, and that is also then impacting globally some of the energy costs that we see.
Sasol Gas already having informed NERSA and customers that the price of piped gas sold to South African customers will increase. Let's talk about the need for Sasol to actually hike the gas prices. What has prompted this increase?
So first of all, the regulator, NERSA, has set a pricing methodology that we need to comply with. And this has been introduced last year, and it will play out for this financial year up till 23 year as well. And so we are just following pricing within that framework. And so we have engaged with NERSA since earlier part of this year, since March, where we wanted to ensure that we've got price compliance confirmation with them within this methodology that they set. And unfortunately, we haven't had a very clear response from them. So we've indicated, the maximum price could be this. If we reduce it by 50% it could be this price, and that's the price we have mooted. We have not implemented that price. We are still engaging with NERSA to get the right price point within this methodology, and that will only provide then certainty for us and our customers how we would then position that pricing. So we haven't made any decision. What goes into the decision making is that engagement with NERSA that is probably going to be imminent and ongoing as we speak.
But from what the industry has said, Sasol does seem to care and know about the impact such increases would have, even if you are using a methodology that NERSA itself has approved, and you're not even going for the high mark when it comes to the maximum increase.
Exactly. We're very alive to that, and that's why we are engaging to get an outcome that is right and just for South Africa at this point in time.
What would be the right outcome? Because in spite of this methodology that is used by NERSA, last week we heard that the regulator at NERSA, that they would investigate the concerns that have been raised by multiple stakeholders, because the methodology itself might not be the right one, seeing at how much of a hike Sasol has proposed.
Well, I think the methodology is not determined by Sasol. There's due process, there's environment, there's participation, there's in public interest that is being considered, and that is an outcome that we would abide by. So I think for us, that's not the issue. And if there are certain entities that challenge that environment, of course, it's their right to do so. But, I mean, we work within that framework. We participated in it. We accepted the outcome, and that's where we are now. And I think, we also need to keep energy security in mind. We are investing over $1 billion into gas development in Mozambique. So we've just announced today that our infill well drilling campaign, where we invest over $300 million, that is what we invest to bring gas to South Africa, is ongoing. So we have to have a balance, that we've got certainty with our investments, that we do not subsidize a different market, but our real investment is not rewarded in terms of what we continuously invest into this. So I think that's also a lens that sometimes not get discussed, in terms of we need to continuously invest, we need to be rewarded for that risk of investment, and that we will have to make sure that it's within the realms of the reality test in terms of the pricing mechanism that is fair for all parties.
Let's talk about something else that's quite important, and that's the decarbonization drive. You've warned that the carbon tax as it stands could actually prompt you to scale back on operations when it comes to the prices, the taxes that are posing a significant risk to Sasol's operations. Please explain that.
First of all, Sasol is very supportive of a carbon tax. The clarity around how it's implemented, what are the rebates, etc. We just provide one lens into that to say that if we don't have clarity on that, that is what it can do to our cash generating ability, because it's a simple sum. You time the dollar amount to the CO2 tons we emit, and you get a value, and you can say, okay, is that a value that will keep us in business or put some pressure on our viability as a business? So that's one lens into it. That's the only lens that we flag, because I mean, there is a TLAB process. We are very committed and open to participate in that. We will put our case forward. I think there will be a very pragmatic approach. What is in the interest of South Africa? Because, I mean, let's take the example. We are reducing our greenhouse gases by 30% by 2030. We committed to that. We are fitting snugly into the national determined contribution that is 25% reduction by 2030. We are doing 30%. So we committed to do that. So why would you shoot the athlete in the foot in the last 20 meters before it gets to the finish line to deliver that? I'm saying that, penalize the athlete if he doesn't get to the finish line. But if he's on his way to deliver that, why do you want to unduly penalize him? Those are all the angles that we need to bring into this debate. And the process that's foreseen is opening up so that we can bring these views in. And I think a pragmatic outcome will prevail. So it is just one of the things we highlight at this point.
Well, on that note, inflationary concerns have